The long day white pattern is characterized by a single candlestick with a long and strong white or green body. This candlestick represents a significant price movement where the opening price is near the low and the closing price is near the high of the session. It indicates strong buying pressure and bullish momentum in the market. Traders often interpret the long day white pattern as a sign of continued upward movement, suggesting the potential for further price appreciation. It can be used as a signal to enter or add to a long position, or as an indication to hold on to existing bullish positions. The rickshaw man pattern is characterized by a candlestick with a small body and long upper and lower shadows. It represents a state of equilibrium between buyers and sellers where neither side has gained control. The candlestick resembles a rickshaw, with its body in the middle and long shadows extending in both directions. Traders often interpret the rickshaw man pattern as a sign of indecision and a potential reversal in the market. It suggests a balance between buying and selling pressure, indicating a possible shift in momentum. The pattern can be used to identify potential trend reversals and to anticipate price movements. The wishbone bullish pattern is characterized by a candlestick with a small body and long lower shadow, resembling the shape of a wishbone. This pattern suggests a temporary dip in price, followed by a strong reversal and upward momentum. Traders interpret the wishbone bullish pattern as a signal of bullish strength and a potential trend reversal. It signifies that buyers have stepped in, pushing the price higher from the temporary dip. This pattern can be a strong indicator of buying pressure and a potential entry point for bullish trades. The wishbone bearish pattern is characterized by a candlestick with a small body and a long upper shadow, resembling the shape of a wishbone. This pattern suggests a temporary rally in price, followed by a strong reversal and downward momentum. When traders spot the wishbone bearish pattern, it serves as a signal of bearish strength and a potential trend reversal. It indicates that sellers have stepped in, pushing the price lower from the temporary rally. This pattern can be a significant indicator of selling pressure and a possible entry point for bearish trades. The morning star with hammer is a bullish reversal candlestick pattern that consists of 3 candles. The first candle is a large bearish candle, the second candle is a small candle with a long lower wick, and the third candle is a large bullish candle. The long lower wick of the second candle indicates that selling pressure is waning, while the large bullish candle of the third candle confirms that buyers are in control. The morning star with hammer is a relatively rare pattern, but it is considered to be a reliable indicator of a bullish reversal. When this pattern is seen, it can be a signal to enter a long position. Here are some things to keep in mind when trading the morning star with hammer. The pattern is most reliable when it occurs after a prolonged downtrend. The pattern is more likely to be successful if the third candle closes above the high of the first candle.